When it comes to life insurance, it can be challenging to not only figure out how much you need, but how long you'll need it. Today we'll be covering 3 scenarios where you might want coverage longer than you originally thought. Hi, I'm Charlie with Wealthquest, and today we'll be talking about 3 scenarios where you might actually want life insurance to not only last to retirement, but through your retirement. Many people purchase life insurance when they're getting married, having kids, starting families. The thought is to protect their loved ones should anything unexpected happen. And it can be challenging enough to not only figure out how much you need, but how long you need it. And very little consideration is often given when designing how long that coverage lasts. This is why we often see 20-year term policies being the most common policies that are bought and sold. Some people let their insurance go or cancel it when they're getting to retirement. The thought is the kids are out of the house, they've covered education costs, the kids are off the payroll, they've made it. They can finally afford to retire now. And if something happens to either spouse, nobody's financially impacted any longer. But here are 3 scenarios where you may want some life insurance in place to protect the other spouse. The first is if somebody's receiving income from a pension. That income may be either reduced or eliminated when that recipient passes away. This reduction in income can have a significant impact on the surviving spouse. So it might be helpful if there's life insurance that can come in and help replenish or replace some of that lost income from the pension. In the second scenario, maybe there's not income from a pension, but both spouses are collecting benefits from Social Security. When the first spouse passes away, one of those benefits is going to be gone, and it will be the smaller of the 2. But again, we see a scenario where there's a reduction of income to the surviving spouse, and the life insurance can come in and act as a replacement to some of that lost income. In the third scenario, maybe there are additional expenses during the retirement years related to long-term care needs for one of the spouses. These costs could significantly deplete the retirement nest egg that was built up to last for all of the retirement years for both spouses. If there's not long-term care insurance to help cover those costs, this could leave the surviving spouse in a serious jeopardy for the remainder of their lives. A life insurance policy could be used to refill that retirement bucket so that the surviving spouse can maintain financial security for the remainder of their lifetime. If you're approaching retirement or already in retirement and have life insurance policies that are getting ready to expire or you're considering letting them go, you might want to give a second thought and leave the coverage in force. If you're younger and still doing some of the longer term planning around your insurance needs, give it a second thought in terms of how long you might actually want or need the coverage. As always, if you have questions, let us know. We're here to help.